back to watching Business Morning here on Channels Television. And yes, Dangote Refinery has further reduced the ex-depot price of PMS, and that should trickle down to the pump. Let's talk to economist at financial derivatives company, Mr. Clement Igbanugo, to see how much we can expect. Mr. Igbanugo, good morning. Welcome to the program. Are we going to buy petrol at 500 naira very soon?
Good morning, Amy. My pleasure. Yeah, no, well, we've been there. Of course, you know, we are now in a new normal, away from where we used to be, where petroleum product prices were fixed. So with the deregulation of the downstream sector, what is clear is that Nigeria is now more integrated with the global oil market, especially in terms of pricing of petroleum products, right? But this comes with risk, both risk and opportunities, right? In April, in March, Dangote raised the price of price of petroleum PMS petrol, and in April it brought it down and brought it down again. That's twice in April, right? And what is this telling us? Two things. Of course, you know that the petrol or PMS is one product in Nigeria that is quite highly politically sensitive, because you see people campaigning around it. If you shift or move the prices of petrol, you begin to have a lot of public outcry and backlashes. And then it's also price sensitive because most of the households and small businesses are relying on this as a source of energy. Remember, electricity coverage in Nigeria is about 60% of the population, and that is 6 hours of electricity per day on average. So about only 20% of the population could be having as much as 12 hours a day. And the informal sector depends on this as a source of energy, remember? And this informal sector contributes as much as 120 trillion of our GDP. So that is very price sensitive. Whatever happens to it has an impact on consumer welfare as well as on businesses. So that said, I think we're going to begin to look beyond this, because if global oil price declines, price of petroleum products is expected to come down. But remember, it's going to have a bite on revenue. And if global oil price goes up, price of petroleum products will go up in tandem, but it's also going to have a positive impact on revenue. So the question now is, how are we optimizing these new dynamics to ensure that we minimize economic disruptions?
So saying that things will come down, I mean, the other time we had a reduction in the price of petrol, we didn't really feel the difference in transport and in food. Perhaps, is it the time lag that's required, or how long is it supposed to take for it to reflect? Or is the difference too minute to be passed down, you know, to commodities and transport?
I think I'll look at it from two perspectives. One is lag, number two is expectation effect. If there's a decline in the price of petroleum products, if the market is expecting that this is temporary, then you know the shoe leather effect. You wouldn't go and begin to change your prices. You want to wait and see whether this has come to stay. Second is making decision on price changes sometimes also take a lag to implement. But very importantly, Amy, is the magnitude. So if you reduce fuel price by 10 naira, will transporter now reduce his transportation charge from 1,000 to 500 or 800. So it depends on the magnitude of that change to be able to see that move. So we have magnitude, we have lag, and we have expectation effect acting on those price movements.
So I wonder what the perception is now. I'm seeing that the drop in the price of global oil is because of the trade tariff, especially what's going on between the U.S. and China. So, well, there are talks that eventually one of the presidents would have to blink, even though we don't see that now. China is now attacking the services by U.S. with tariff, obviously, and President Trump hasn't showed signs of blinking, at least when it comes to China, even though he has tapered a bit when it comes to the war. So what perception does that give, that to oil prices or oil demand, which is what is controlling the prices, do investors or does the economy see possibility of prices coming back up, or is this the level we think we will live with for most of 2025?
In the entire global geoeconomic order is changing, and it's changing very fast, right? For oil prices, our expectation is that oil prices will remain bearish for 2025. Well, the global economy is navigating uncharted waters, and sometimes it becomes very difficult to predict. But look at the issues here. Yes, there's a sanction on Iran, in terms of their exports to China and all of that. And this is the sanctions since President Trump came on board. But these are the issues. One is supply. Before, it used to be OPEC that holds the ball, right? Now we're seeing a shift where the non-OPEC countries are supplying more. The non-OPEC countries used to account for 60% of global oil supply. Now they're accounting for 70%. And do you know that this year is expected that these non-OPEC countries are going to increase their supply by about 1.8 million barrels per day. OPEC countries will only increase by 100,000 barrels per day. So this oversupply that is coming from this other end, the non-OPEC, is going to put a downward pressure on prices. And now we're talking about demand. China is the world's largest consumer of crude. We are having this uncertainty, the trade war, right? And the growth momentum in the U.S. is being projected to be depressed. That of China the same, because in environment of a global trade war, there's no absolute winner. All right, the global economy will lose. So the global trade that was before, earlier in the year, projected to grow by about 3%, is now being projected to contract by about 1 to 2%, and that is going to put a downward pressure on demand. So you have supply going up, you have demand moderating. That is a bearish price for crude oil, and here we are. Nigeria's break-even oil price is about $60 per barrel. And today we are 65, tomorrow we are 64, and then we are dangling that way. It means that we really need to roll up our sleeve, because that is the pressure on fiscal earning. But much more is on FX. I'm even getting more worried on FX, because in 2024 and the January, February, we had that portfolio inflows, and we are happy, the honeymoon, and the money we are coming in and flowing in. In fact, in January, we had portfolio flows of about $2 billion. In February, it's the same, about $2 billion. But do you know, in March, it came down to about $600 million sharply, with even offshore sell-offs. And that is the pressure you are seeing on the Naira. So with the global uncertainties, as we are seeing it today, and investor sentiment faltering, we are actually working on eggshells, and we need to do much more to keep ourselves above the waters.
Yeah, I think the eggshell gets even worse, because we see threats to our crude production, even though the target is about 2 million for 2025.
We're doing 1.4.
Yeah, we saw a drop, and then we see more threats in the Niger Delta to our production. It does seem like the issue of vandalism and theft, and then, of course, the disruption, the protests that we've had in Delta State this month also. So the numbers, well, may go down even more. And that's why we see it in the FAC. We saw FAC released, and we saw it drop for a third month. What threats do this, the drop in crude production, the drop in global oil prices, which of course leads to the decline in FAC, what threat does it bring to the Nigerian economy? And perhaps there can be a hedge, if at all.
Yeah, thank you very much. The way I'm looking, I was having a conversation a few days back, and we're looking at the calm, all right, the stability we have this year so far. And I describe it as a fragile calm, right? Because we look at this what we call calm now, but the fundamentals are actually very disturbing, right? Because you are talking about, one thing is to have a success, another thing is to sustain it. We have made tremendous success between 2023 and 2025 in terms of ramping up oil production, right? But the question now is, how do we sustain it from where we are today? Because for the past 3 months, oil production has been declining, and there are more indications that the risk is to the downside. There are more indications that the oil output will remain depressed. And remember that up till now, with all the campaign we have been doing about non-oil export as a source of effects, oil and gas is still contributing about 90% of our of our export earning, and we don't even have the sustainable foreign capital coming in, because what we have is the footloose capital, the portfolio flows, which is opportunistic. Foreign investment inflows is declining because we need deep reforms. That deep reform has to do with institutional reform. It has to do with changing, recalibrating our business environment governance framework, right? If I'm an investor and I want to bring money into Nigeria for green investment, I want to start a new business in Nigeria, and I have to buy a land in maybe, let's say, Lagos or Abuja. If somebody comes and takes that land, how long is it going to take me to recover that land? And what is the probability that I'm going to recover that my business premise? This assurance, if we can't give this assurance to investors who want to start new business, because Nigeria has a lot of potential. One of the biggest markets in the global south, right? In Africa, we are top one. So, but the issue is that now we have dealt with the issue of revenue reforms. We need to begin to deal with the issue of structural rigidities. We need to deal with the judicial system. We need to deal with the regulatory framework. We need to deal with the business environment governance, so that sustainable investment inflows will begin to come. And mind you, remember that you see FAC declining. Part of the unsaged problem, and that is part of what I've envisaged before now. When you have done some reforms, raise up your tax, the base and the net and all of that, that is very fantastic. You're going to raise your revenue. But beyond that, if you do not have sustainable growth in terms of corporate performance, in terms of household income has declined from $8,500 in 2018 to $4,500 in 2025. If you do not have these indicators improving, the possibility or the probability that your tax will keep growing is less than 50%. And so it gets stuck, because you have wrapped up within the available space for you. You need to increase the space. And to increase the space, you must increase productivity. Look at what is happening to inflation. We have productivity issue. And we now have to go back to the drawing board and begin to deal with those issues so that we'll be able to achieve our great aspirations of both growth and size of economy.
Yes, so, and honestly, sometimes we do get tired of talking about potentials. We've heard, we agree, we know we have potential. So thank you so much for bringing that up again. Mr. Clement Igbanugo, economist with Financial Derivatives Company. We're all looking forward to realizing our potentials in Nigeria.
Thank you, Amy.